Early 2023, I got laid off, reduction in force. Never had been unemployed, so it's what the heck are we doing? Didn't really know how to deal with that situation. If not now, when will I do it? Right? Will I wait till I'm, I don't know, 60, 65, whatever? There's one I think which basically could apply to almost pretty much any small business owner. And I actually fell into the same trap at the beginning when I started my practice, thinking that you can do everything yourself. My goal is when I start with a client to bring them to a point that they will tell me someday, Chris, I don't need you anymore.
This is the Bender CFO Podcast, where we empower business owners to gain financial clarity and maximize growth.
Hello, everyone. Today I'm joined by Chris Thomas, a seasoned finance leader with nearly 3 decades of experience in accounting and finance. Chris has held senior roles across Fortune 500 companies and mid-size organizations, where he led large teams, managed budgets in the hundreds of millions, and provided strategic leadership from the plant floor to the corporate boardroom. Chris is the founder of Blue Oak Consulting, where he now serves small businesses as a fractional CFO. His focus is on improving cash flow, profitability, and long-term growth by helping companies uncover blind spots and make smarter financial decisions. So welcome to the show, Chris.
Thanks,
How are you doing today?
I'm doing all right. How are you doing?
Doing great. Yeah, so we've had an opportunity to talk with a couple other fractional CFOs in our group. We have a group we call it the FCFO group, where we're allowing us to collaborate with each other, where people have different industry experience, just different experience in different types of CFO responsibilities. Some people even in the group do accounting and bookkeeping. Some people don't. Some people focus on FP&A. Some people focus on raising capital. But I know Chris has a specific focus. So just tell us a little bit more about the industry that you primarily serve and your experience has been in that space.
Yeah, my focus is on, let's call it industrial, meaning anything manufacturing and who serves manufacturing. And that is just because all my corporate experience has been in the manufacturing space, talking about chemicals, resins, B2B, food and beverage as an example. So I have been in a lot of different industries, different type of process types as well.
Yeah, well, great. I mean, it sounds like you've had some pretty large companies in that you've worked with in the past, or maybe more full-time, and now you've moved into fractional roles. But tell me, how did you get from or go from being a full-time CFO or full-time finance person to this fractional space that you're in right now?
So there were a couple of things which all together at some point got bundled and led to that. The first one is in about 2020, I started to think about I want to do something by myself, be my own boss. So I started to look into franchising. I honestly didn't have the guts to start on something individually there and take that leap of faith. Probably just the corporate security was holding me back. But now it's a blessing in disguise. Early 2023, I got laid off, reduction in force. Never had been unemployed, so it's what the heck are we doing? Didn't really know how to deal with that situation. And a couple months into that, I was like, you know what? If not now, when will I do it? Right? Will I wait till I'm, I don't know, 60, 65, whatever? So I really started to look into what can I do and where can I help most, and started to ask questions within my network on where they would be able to see me. And it crystallized towards the fractional CFO role because of the leadership and the actual execution experience I have had out of corporate in all the accounting and FP&A roles I held in my past.
Yeah, no, that's great. So how do you, just with the people that aren't as familiar with obviously finance and all the different roles, because I've talked about in previous podcasts, you've got obviously your accounting function, you have getting your books done, you have your FP&A financial planning and analysis, what is it, forecasting and modeling, and then you've got your kind of higher level strategic CFO work and the integrating across different departments and different parts of the organization. And are there certain clients, revenue size, or ways that you feel like you really just add a specific examples where you're adding this particular value and impact to your clients?
Yeah, I think it's businesses who are in that area of roughly 1 to 15, $20 million, potentially up to 25 million. Most of my prospects and clients actually had been more in the 1 to 10 area. Currently have a client as well who's targeting about 13, 14 million this year. So it is in that lower tens, lower single digit $1 million range. Employee wise, could be 20 or less, maybe 30, depending on where they are.
Yeah. So how do you, and you've spoken to me about focusing on manufacturing or industrial, I think you mentioned a little bit earlier. So what do you do when you go into an organization? Because I mean, in that case, they have many times they have inventory or they have like certain
Right.
manufacturing processes, then your different stages of that process, whether work in progress or wherever they are. Like, what do you do, or what do you find like the issues that you go in there and try to solve?
Most times when I talk to prospects, it's actually starting with cash flow challenges or not having enough control on what is happening with cash flow. So
Mhm.
that is very, very often the priority. With others, it's profitability in general, meaning not making enough money. Is it sales pricing? Is it potentially too high of expenses? One of my clients actually was not adjusting any sales pricing for like almost 2 years with a client of theirs. And what they didn't see was that the cost increased so much over time that the margin decreased by significant number. So I helped them with changing that again. And then the third item I often help with is just a strategic approach because some small business owners are really focused on the day-to-day operational stuff. And I try to help them to get on the call it elevated level on looking where do I want to be in 3 to 5 years as well. So it depends really on where they're at and what their main challenges may be at the time.
Yeah, I get that. Yeah, it does seem to be with this inflationary environment we've had over the last 5 years, it's difficult for people to stay up on their pricing. And then, of course, if they're in a situation where they're buying materials, or maybe it's a combination of labor and materials that are going into their cost of goods sold, that could their margins can erode. I'm thinking specifically in the industry that you're focusing on, but I've seen that a lot. So it makes a lot of sense to me. So what in today's economic environment, we're talking about inflation. I know we've previously talked about in other podcasts the tariffs. There's some just always new news, new financial economic trends that are happening. Are there certain things that you see that business owners should be watching for?
It really depends on, for sure, their industry and where their market is, right? If somebody is working with global companies for whatever reasons, then, certainly to follow what is happening there is important. One of my clients actually lost a customer because of that, because they were not able to sell with profit anymore. I would say generally with the customers I most times deal with, it's really looking at the prime rate, understanding where that is going, understanding if I maybe need to refinance and look into that. Because unfortunately, a lot of the small businesses, when they go into a loan situation, they don't really know what to look out for or what the current market maybe is. I would suggest really just before you go into a loan situation with anybody, make sure you understand what the prime rate is and what they're offering from an interest rate for loans.
Yeah, do you most of your clients have loans based on like their building or their inventory, or how are they going out there and what are they using to finance or getting cash?
Unfortunately, what I see with many prospects and some of my clients is they made wrong decisions along the path at some point. Didn't really know what to look out for, like I mentioned earlier, and got into a situation where they got desperate. The house bank did not want to provide any additional loans or funding. So they unfortunately went basically just to the Google search and found what I call the payday loan sharks, which are
Mm,
25, 30% and up. It
mm.
will give you cash within 24, 48 hours, which is really sounds great and tempting. But the problem is, if you prepay, you don't have any benefits, right? Because it's a predefined amount, what you're basically paying back, regardless of how much you're paying back earlier. And if you do not pay on a weekly basis, that's their payment terms basically, they will call you on a weekly basis. They will not be in front of your door with a baseball bat. However, they will call constantly until they get their payments. And trying to get them out of those type of situations to create the cash flow to be able to finance that part and then being able to potentially refinance other loans with lower rates as well.
Yeah. Yeah, this is definitely a common issue. So are they in a situation where they're taking these types of high interest loans, are they usually not profitable, so they're having trouble getting traditional bank loans, or do you try to get them in traditional bank loans?
I think most times it's desperation, right? Because they don't really know what to do and where to go. They talk to their house bank. Sometimes they don't not really think about, hey, there's 25,000 other banks who want to do business with you. right?
All
Which
right.
ones are the ones out there who are really there to help you and not just promise you the world and then later don't talk with you anymore, right? And
Right.
within my network, I'm trying to use those where I know that they are reputable, they look for the relationship, they don't just look for the big buck, and then introduce them there and see can they potentially help them. With those payday type of loans, there's certainly no leverage, nothing you can do much. But what I often see in combination is it's a couple of different loans, it's a couple of different credit cards with higher interest rates. So the first thing really is looking at how can I refinance that part with getting to an interest rate of maybe say 7, 8% versus credit card being 20% or more. Being able then with that reduce interest payments and with that improve the cash flow in general for them.
Yeah. Now, I have situations right now where it's always nice if they do have inventory or AR or some kind of building situation, collateralized situation with these loans. But I was a situation with a client that, or just a general line of credit, like having a line of credit where you can at least show some financials that have some semblance of profitability or to
Right.
be able to get that. But the problem is if you wait too long and you're not profitable, because I'm in that situation right now, but where the financials don't look very good, the traditional banking scenarios just start to evaporate. And then you have to find some other alternative financing options that usually are higher interest, of course.
And but the thing is, like with one of my clients as an example, they have been growing like crazy over the last few years, roughly in that 50% per year rate.
Yeah.
Enormous on what you have to really balance between your spending, the revenue, making sure that you still make profit, and having that cash flow to generate that next level or step of growth. With them was also for me understanding what is their situation, what is their story, and then talk with my networking connections with, hey, this is what is the call it overall scenario. Do you think you can help? And if they believe they can help based on high level confidential information without providing any details about the company, if they can, I'll make the introduction and then we'll take it from there. And with one business here, we were just able to negotiate a very good line of credit, revolving line of credit, which will help them to even grow potentially faster of having the funding to invest in staff, maybe a little bit more technology. They are currently doing leasehold improvements because the second part of the office needs to be built out, right? So they have the funds for those type of expenses.
Yeah, that's great. Yeah, that's a highly valuable service that you're offering is to be able to get them the right type of credit, the right financing with a good interest rate so they can grow to the next level. And that's common, I would say, in manufacturing. I would imagine that being able to grow in a situation where you got to pay for inventory ahead of time, or you got to pay your employees or subcontractors a little ahead of time, it's just hard to front that money. So you kind of have to have some help. Yeah.
Scaling there is certainly really difficult, especially with some of the smaller businesses. You don't necessarily have contractual agreements, not as much as you maybe have in the call it Fortune 1000 or Fortune 5000 businesses. Even in mid-sized businesses, you normally really go very, very contractual on every single transaction. In the small business world, you don't always see that. And that one is certainly really challenging when it comes to those commitments. When do we start scaling? When do we start with this new product? When do I need to have the raw materials available? The good thing is with some of my clients is they normally start with kind of pilot production. Can we do it? Is it the quality? Can we do it for the pricing with the call it assumptions behind it? And then slowly start to scale. But not every time this is doable because one of my clients at the moment has the situation as one of their prospects potentially can come in with I would estimate like $150,000 additional revenue on a monthly basis. They are a $2.5 million business. So you're talking about basically 60, 70% of growth with one
Mhm.
prospect. Buying all that inventory for that will be a challenging situation and really need to be balanced and scaled slowly and carefully so they will not get into trouble because of that.
Yeah, no, that's definitely important because a lot of times you want to look like you're bigger. You want to go to the customer and say, "Can you give us all this money up front?" Obviously, if you convince them, that'd be the best case scenario. But many times you got to front the money. Yeah.
Yeah.
So, our aside, obviously, we know cash is king, and it's always a an important factor in today's environment with interest rates starting to creep down again, which is good. It definitely helps. Are there other pitfalls though that you see within your clients that can help that should be avoided?
There's one I think which basically could apply to almost pretty much any small business owner. And I actually fell into the same trap at the beginning when I started my practice, thinking that you can do everything yourself. You need to find a timing when it is best to potentially outsource and delegate items. My favorite example always is in the very beginning when I started, I thought I can do all the graphic design by myself. Honestly speaking, I suck at Canva and graphic design, but I thought I can do it and spend a whole Sunday on that and invested that into a really bad product at the end of the day. So finding somebody who has the expertise and knowledge in something you cannot do or not good at, I think is really key. The other part is understanding when it comes to balancing your activities. So with one of the clients, I was, I don't know, call it lucky to get involved because they're at a point from a growth perspective that one of the co-founders does not want to deal and cannot deal anymore with the daily financial activities. So he needs somebody to help them with.
Mhm.
So that is a prime example on probably from a good balancing perspective when it was good to do that. You referenced cash flow earlier. That is the biggest thing. Actually, also today in a prospect call, the other big part, not knowing and understanding your P&L. I asked the question, I said, look, this is a trick question. I know it is. Tell me, what is your gross profit percentage and your net income percentage? I can look it up. And I'm like, no, that's not what I'm looking for. You answered already what I wanted to know. You're not looking at it. You don't know what those numbers is. You need to understand what are the drivers for your revenue, what influences your cost. And with that, you can drive growth in your business and profitability. And that's, I think, after cash flow, probably the second biggest thing out there.
Yeah. Yeah, you said a lot of great things there. Obviously, the first point with being able to try to wear all the different hats. Do you have just in the finance and accounting arena, there are many different hats, and as you grow, being able to not be the person doing all of those things, or maybe you need to improve upon your accounting function to make sure you got better accounting, which will feed into the FP&A and the CFO duties. So that makes perfect sense. And the smaller ones are the worst with it because they may be having like somebody themselves or family member doing the
Right.
accounting, which then causes you not to have your gross profit percent. It makes any sense whatsoever because you can't tell what it is because they've coded it all wrong.
Right.
And so I totally understand why that's an issue. So yeah, no, this was some great discussions. And of course, cash, just being able to look at that. So all very good points. So one of the things that that I the whole term fractional CFO sort of really taken off over the last few years. And there are many companies, especially in that 1 to 20 million that you were mentioning, that don't even know what a CFO is. There may be still people out there that are not sure, what that duty is. They may think that's like a bookkeeper or something like that. And so
Yeah.
then you've got people that don't understand the different roles, or they understand taxes, though they think it's all related to taxes. It's just all the things. How do you give advice to a business owner that's wanting to hire a fractional CFO? What do you say to them?
What is interesting when you said that they don't know sometimes the difference. So often in my outreach, I get the response back that I'm not looking for an accountant. I don't need an accountant. I have accountant. And I'm like, I'm not doing accounting. I'm your strategic business partner to help you grow your business and get it to the point where you want it to be. It is trying to help them understand that it is the business partnership. It's more or less the right hand of the CEO or business owner, and helping them to understand that what we are doing as fractional CFOs is bringing clarity, financial clarity into their business operations. I talked earlier about what are the drivers for revenue, what are the drivers for cost. It is helping them understand that, right? It is helping them understand that maybe some subscriptions are not the best. Get rid of them, right? Fixed cost, eliminate it, improve your margins. Sometimes it's also helping them to understand, call it the financial terms within it because they talk to their bank. With one of my clients, I actually recently started a financial training for non-finance professionals, helping them to understand what is fixed cost leverage. Why is it important? Why do I want to know what is fixed versus variable cost? Why do I need to understand what it is? How do I influence it? And just helping that, I think, opened their eyes to some degree, and just a light bulb went off. So I think it's very difficult to explain it sometimes. And look, I have been in finance and accounting all my career. So for me, it's a given. So I certainly have my challenges explaining it. But it is at the end, like I said earlier, I think it goes all towards the strategic partnership and helping towards financial clarity.
Yeah. Yeah, I know it's important. You got to find the right fit. You got
Right.
to be able to use the right language, or that you just feel like, hey, that we're connecting here. So being able to interview, and that's why we have this group that we have created, because not every CFO is the right fit. Some people want they want more of the accounting, and then they want some CFO work. They want maybe a one-stop shop. We have some people in the group that sort of do that. We have people that have different industry experiences, or maybe they need to raise capital. They want to have a scenario where they want to find somebody that could, another equity partner or private equity or some kind of raising capital or sell their company immediately. So there's CFOs that focus on that. And then you also have, there's some overlap with some of us. So some of it's just like, who has the availability, who has the time, who do you connect the best with? So there is, all of that's important in hiring a good CFO. So yeah, I think that all made sense to me. So tell me, I always like to end with these types of things to move it a little bit to the personal, just to kind of allow people to understand, hey, what makes you tick? What's keeping you motivated? How do you define success, whether it's personally or professionally as a fractional CFO?
Interesting question. For me, in all my career, I always had a knack for what I call general growth. Very often it was developing people in my teams, getting them to a point where they could advance in their career, but also working on projects which were related to expanding on a business unit, expanding volume, just capacity in itself, and then being able to go into different markets. In my experience, or where I have been in the corporate world, I had been in organizations where I had responsibility for just say Texas sites. Others were global plants, right? If you're talking about Taiwan, Singapore, Korea, Canada as an example as well, and a few sites here in North Texas. Seeing those things connect and grow has always been my thing. And seeing that with small businesses, it's just a little bit of an add-on because they don't always have the resources. When you think about the big corporate businesses out there, thousands of people, a lot of money for all different kind of tools, and I'm trying to help small businesses with getting those, at least a mindset and some tools into their organization so they can have the same kind of tool set, I guess you can say it, and then seeing them grow again here. And then also when I think about me and where would I see myself, then where I could declare success, as you asked, my goal is when I start with a client to bring them to a point that they will tell me someday, Chris, I don't need you anymore. I need a full-time CFO. That's where I want to get them towards. But for sure,
Mm,
also, they need to desire that. If they want to build it towards a point where they're saying, hey, I want to pass it on to my kids, that's fine. But for me, the ultimate goal would be if somebody wants to grow, to get them to a point that they need a full-time CFO.
yeah. Yeah, that's great. What if you did have a goal that you want to grow the organization to the size that, and I think that you need to be well past 20, 30 million in many cases, unless you're trying to be publicly traded or something. But you could probably go well into the 20, 30, I've heard even 50 million in revenue before you need, say, a full-time CFO and that level. But can you imagine that if you've been working with a fractional CFO since you were 5 million or 2, 3, 4 million to 5 million, and you grew from that, to be able to work with that full-time CFO, you'll have such a better understanding at that point in time. It'll add significantly more value. So that makes a lot of sense. Yeah, no, it was great talking with you, Chris, today, and just really getting to know you and your focus and how you go about operating as a fractional CFO. Any particular last thoughts or anything you want to share?
Maybe just two or three items. The one thing is when you work with an accountant, make sure that they provide the services that you really need. Too many times I see people working with accountants where the P&L is just inaccurate. And the other piece I mentioned earlier, know your P&L. That's the advice for all small business owners. Know your P&L.
Yes. Definitely. Know your numbers, know your P&L, know the percentages. That's great. Chris, it's good talking with you today, and you have a great rest of the day.
Thanks, Shane. Thanks for having me. It was great. Talk to you soon.
See you later.
Thanks so much for listening to the Bender CFO Podcast. Help us out by subscribing on YouTube so you don't miss another episode, or listen to us on Spotify and rate us 5 stars so more people can get this content to help their businesses grow and be successful.